to be accepted, and then it's going to take less than 24 hours for your account to be set up. So why I'm showing you all these things, because people just want to make the money. Let's go, let's make this money. I don't want to presume everybody knows. And two, when you first start setting these things up, there's new verbiage that's being presented to you. The terminologies, the phraseologies, the nomenclature of the market is hell, is complete hell, the nomenclature of the market. So what I mean by that is you're going to hear words like holdings and positions and margins. You're going to hear words like holdings, positions, and margins, and you ain't going to know what the hell is going on. So we're doing this for the neophyte. We're doing this for the novice. And sometimes we'll switch gears and drive you forward. And don't think or be ashamed that, hey, I don't know this, I feel uncomfortable. Because guess what? There's such a diversity of things you can do on the market. There's people that I know that are very accelerated, but then they don't know this because they don't deal with dividends. So this is just like, how do I get to there? They're in the same space you're in, and they've been dealing with the stock market for years on end. But some people are just day traders. Okay, some people are swing traders. So there's different approaches towards making money on the market. It varies. So at any instance, someone who's been doing this for years can be very new to this information right here. So right here, you'll press update, but you won't be able to click it. You should be able to click it, but you won't be able to click it because now you're gonna have to set up margins. But I want you to still go here and make it up to this point so you're familiarized with what to do and how to do it. When you set everything up and you click update, like right here, I have American Airlines and I have Boeing. These are two companies that do give you dividends. These are two companies that I invest in, that I have my family invest in, and then, you know, people that trust my direction, they tend to invest in certain things that I invest in, you know, because they choose to, not because I told them to. Let me say it like that. And I like Boeing. I like the dividends that they give out. I like American Airlines because they're a staple. I'm really in it for the long haul, and I'll take the dividends because they give dividends, but I'm in it for the long haul, so that's another conversation. American Airlines is identified as AAL. Boeing is a company that's responsible for making spaceships, making airplanes, and also contributing to making militaristic devices and apparatus. That's Boeing. Their stock symbol or ticker symbol is BA. So right now, you know, Royal Caribbean is RCL. That's their stock symbol or ticker symbol. It means the same thing. So you got Boeing is BA. You have American Airlines, and American is AAL. And then you also have RCL, which is Royal Caribbean. Facebook is FB. So these are the stock symbols, or these are the ticker symbols, whichever one floats your boat. So now after you click update, now they give you an option. The option is if you want to deposit to your core account, or if you want to deposit to your, or reinvest in security. So here's the core account. Core account is your wallet. So when you set up Fidelity, you're gonna see a word that says core. That behaves as your wallet. And we'll go into that in the next presentation. And then you have here, which is reinvest in security. This means that you want your dividend not to go in your wallet so you could spend it. You want to put your dividend back in to the very security or the company you invested in. Okay? And that's what this means. Put anything that I make back over here. Into whatever made it for me, I want it right back in there. Now we're also going to go down here. And when you go down there, you're going to see all equity positions currently held in this account. I check it off. So I want to apply my dividends to all equity positions currently held in this account. That's what this says here. Now the bottom line, I got checked off too. It says future equity purchases, transfers, and deposits to this account. So what I'm basically saying is I don't care who gives me the dividend, put it all in my American Airlines. Put all my dividends in my American Airlines. And that's a strategy you may want to employ if you buy stock in something that's relatively cheap as far as each share, and you have a pretty extensive portfolio. You may want all your dividends at the end of the year to be filtered into one security, so your dividends actually start buying shares themselves. So that's just a strategy. You don't necessarily have to do it. I'm showing you in this model, that's how that looks. I'm just being as technical as I can so we don't miss things. These are some of the things that people miss that deal with these things for years. Sometimes people have stockbrokers. I got a stockbroker. But it's incumbent that you understand what's going on in the market so you can make more informed decisions on your own behalf. Don't just trust the vision of your stockbroker. Get in tune with the information, because sometimes you might need to call them, hey, I'm feeling this. Don't let no one tell you what to do with your money. You do what you want with your money. However, take heed. Take into consideration, they may be able to give you insight from an educational perspective that you wasn't privy to. But it doesn't mean anything you think is asinine in contrast to what they think. So now you have drip and margin set up. You're gonna go back to the home page on Fidelity. You're gonna click on the home page, investment products. When investment products comes down, because this is how we're going to set up our drip. But in turn, because we're setting up a drip account, or because we're using the dividend reinvestment program, we simultaneously have to set up a margin account. Margin accounts empower you with the ability to borrow against your account, meaning you have the ability to say, front me some money, man, stocks is looking good. That's what you could do with a margin account. You have credit. It doesn't matter if you have bad credit. Just don't have bad credit with the company you have the margin account with. Okay, your credit could be 540 on planet Earth. No one gives a damn. You could have a negative 400 credit score if it's even possible. No one cares. The market is a whole new world, so you could establish credit over here from what you do from this day forward. So margin accounts are pretty dope. They're dopamine. So you go to the home page again. You're going to click investment products. Then you're going to click options after you click investment products. After you click options, you're going to click the next tab that says apply to trade options. You're going to apply so you can trade options. Options is one of the things that I'll be teaching you about, how to make money off of options. We'll describe it in the next classes to come. But you want to be able to trade options. Options give you the right to hedge your bet. By hedge your bet, that means you can root for you making money by investing in the stock in hopes that the money is made and the stock winds up being worth more money later. And at the same time, you could invest some money on if the stock fails and make a lot of money. You can hedge your bet and win doing both at the same exact time on the stock market. That's called hedging your bet. All right, so that's strategy. So there's put options and there's call options. Put options is when you banking on the stock becoming lesser in value, and call options is when you putting your money in the future and saying, I'm putting my money on the stock making more money or raising in value. Then you have leap options when you're investing way into the future and you're able to put pennies. That's why I say pennies off of millionaires. You're able to put pennies on a dollar on these stock options that allow you to go into a contract to own 100 shares at a time. Every option is always 100 shares. A stock option is 100 shares. So if I buy a stock option for $3.04, saying that, hey, I believe Royal Caribbean, I was in a situation where Royal Caribbean was about $41 or something like that, $42, and I was going to buy a put option. And when I was going to buy the put option, I saw if I buy one under the pretense that that stock drops to $12, never mind the number 12, so long as it goes below the $41 that it is, I'm in the money. I made money. Okay, I'm at an advantage, so long as it doesn't go upward. So I said, I'm going to put my money into a put option for a stock that costs $41. And I'm going to buy the put options that's available at $3.04, which means I had to buy a put at $12. I had to buy a put at $3.04. Me buying a put at $3.04 means I was entitled to 100 shares in a contract that is a $3.04 contract. So this means those 100 shares times $3.04. Depending on the difference between how much that stock dropped and how much I suggested, I benefit because now I have, in many respects, a unique price that I can sell 100 shares for simultaneously, or the premium raises and I'm able to sell the contract that I bought at $3.04. I'm able to sell that back maybe at $5. So the $3 times 100 is now $5 times 100 on the market, and I keep the difference of $200 in all around. So I can sell the contract itself, or I can execute the trade at a unique price times 100 shares and be able to sell those 100 shares for that unique price that's advantageous for me in the present market. We gotta go over it, so don't worry about it. I'm just having a conversation so you can think about it. But it's great. It's a great way to bet on both sides and win no matter what. That's what I'm saying to you. So here we have the drip and margin setup. This is wild. They got you going through like 8 pages. I don't want you confused and not knowing what to do. Let me tell you, you have to be, they're considering that you must be an accredited investor. All right, so that means it just means you make enough money and you deal with money enough. I don't want to jump the gun and get into another session. You make enough money to make informed decisions. Fidelity doesn't want to be accountable no more than I want to be for you messing up your money. So they make you go through all of this so they can say, hey, this person said they make this much money. They've been dealing with this information for this much years. So when we allow them to play this game on the stock market, we'll be removed from liability because they may have made an error in not understanding what's going to take place with their money. They understand the rules of engagement. In the same manner that I tell you, everything that I show you here is not what I'm telling you to write. I'm giving you an example of what you would have to put here in order to play that game. If you want to get into the trade and options game, you will have to put numbers similar to these numbers in order to be approved to play this type of game with the options and to also have a margin account. Okay, and also to be able to get involved with the dividend reinvestment program, the DRIP. So I'm telling you, I'm not telling you to embellish, I'm telling you, I'm giving you a framework of idealistically what it would take for you to be approved so you can play the game at this level. This is the behind the back pass. This is the 360 dunk. Okay, you can play with the market, and I'm gonna show you how to play with the market without these things. But I'm also going to get into the behind the back pass, the 360 dunk, the ball through the legs off the backboard, alley. I'm gonna get into that, and this is part of it, okay? So they're gonna ask you to describe your investment objectives. We're gonna move forward. They're gonna give you this slide. Don't worry if it's not clear over here, you have it, okay? And so right here, they're gonna ask you about your employment. You can put self-employed. They're gonna ask you about the name of your company. They're gonna ask you about your company. You can put sole proprietorship. You can put the name of it. It's not like somebody's really checking this out to beat you in the head or IRS is gonna knock your door. It's not that type of situation. Fidelity just needs to remove themselves from accountability if you mess up your money. Okay, city, state. It's very general information here. Got no over here, yes here. While you're looking at the PowerPoint, just look at your slides while I'm teaching this. Look at your PowerPoint, and while you're looking at your PowerPoint, take a look at the slides and you'll understand. It's daytime here, because I didn't want to take a risk sending you your class too late. So here we have drip and margin setup, okay? And when we're over here, a person setting this account up will probably put, they're making over $100,000 and keep everything there. At the bottom, they'll be at over $500,000. And you put yourself at about 25 to 27.5%. And the estimated net worth will put you at around, $100,000 to $500,000, or $500,000. So you'll have this information. You'll know what I'm talking about when you look at it. You'll have this information available to you. Let me see if I could make it. No. Boom. I'm trying to make it a little clearer for you guys. All right. So over here, you'll put how many years have you been trading, each of the following. So a person setting this up might put something between 8 and 10 years. Okay, equities options, you put about 5 years. It's gonna be less than the number you put over there, probably half it. Index options, you're gonna put for about 5 years. Okay, size of these type of transactions, you can put like $2,000, $3,000, $1,500. That's the size of the options right over there. Okay, and then by what company you gonna put? No company. You might put that. You might have a company you've been doing it with. Everybody's at a different level. If you haven't been using a company, you're gonna put no company there. You've been doing this for about 18 years. Okay, these 2 for 5. You know, you break it down like that. But this is an idea of what somebody would put to fill these fields in so they can be approved to start playing the game. Okay? You're going to wind up seeing something like this. It says, important notice, you have selected an option level that requires you to also apply for a margin feature. If you choose to proceed, you will be applying for both the margin and option features. This is a very good pop-up. This means you're on the right path. This means that you've been filling out things the way you need to because you want to have those features. You want to have a margin account and option. Okay, you want to have the option features and the margin features. So this is very good. You want to see that pop up. Okay, so right here, they just want to know, determine your investment objective. And when number 2 comes, you're going to put most aggressive. This is what a person would write. That makes sense. This is just an equation that works out. Doesn't mean you got to put these types of answers. You know, you put whatever makes sense in your world. That's whatever you got going on. But these are the things that you're going to put here in this particular model to be approved. Okay? And then the spreads, the answer for that would be spreads and covered put writing. So that's what a person would put here in this unique scenario. Okay? And then over here on this side, all the answers would pretty much be extensive, 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 extensive. Type of option trading. It's going to always be extensive. That's what you're going to put over here. What type of option trading? It's going to always be extensive. Then on the left, everything's really going to be up here. So on the left, this is what you'll see first. It's just going to ask you, it's just going to confirm all the information that you gave. Maybe ask you for some additional information. And at the bottom, you're going to check off that all this stuff is, you're sure about everything that you wrote here. And it's just going to show that they won't be accountable for anything that you said. You know, they're not accountable. So if you lose any money, don't blame them. Don't be knocking at your door. Don't do all the Negro activity we do with each other in the community. Don't do no YouTube videos. Don't do none of that. You know, if it didn't work out, do it again. If something you do, okay? This means that you're ready to play the game at your own risk, at your own free will in the court. Here's the dead cat bounce. We're really going to talk about at another date and time, but I just wanted to let you guys know that that's where the market is right now. The market is plummeting. It's going downwards. But because of these type of stimulus checks and things that they're doing, it's going to go up. Just the talks of these monies coming out, stocks will go up. And what you can do, you can buy and sell in short intervals to make your money. When you buy and sell in short intervals to make your money within 24 hours, that's day trading. When you buy and sell in short intervals but longer than 24 hours, that's swing trading. Okay, so these are different terms that we'll discuss. And you can anticipate the dead cat bounce because everything ain't just going to go straight down. You're going to have some times where things seem to be going upward, and then it's going to go back down. And you might have 2-3 days where it's going up because of false hope or news that gives people promise and optimism. But in this economy, it will inevitably continue to go down. So you have to come up with an investment strategy if you want to make your money in minutes. Some people are kind of like in seconds, right? But accumulatively minutes. Some people make their money in the first 5, 10, 15 minutes of the market and they done for the day. That's how some people trade. Okay, some people trade on the pennies and accumulate enough pennies on the trade. Every time something goes up a few pennies, they accumulate enough and they're done for the day. So it's different approaches. But 2 that I mentioned is swing trading and day trading. So we're gonna study this dead cat bounce. A dead cat bounce is when you're in a recession or just in general, the economy is consistently on decline, and every now and then you wind up with these ups, these highs. And then it goes by low, but then there's a high again, and then it goes low again, and then it's a high again. That's called the dead cat bounce. You start thinking, damn, things are looking up if you don't know better. So I'm forewarning you, it is not going to get better yet. When you see it looking good, don't lose your mind under the pretense that you don't have to watch your investments. Watch it, because that's the dead cat bounce. Beware of it. The economy is either going on a steady decline or it's going on a steady rise. It's never flat line. It's never neutral. Okay? So right now, the pH of the economy is acidic right now. But from time to time, it looks like we're going to wind up becoming base. Right now, this is what you call the bear market, because bears attack downward and bulls attack upward with the horns going upward. So the bull market is when things are going good, relatively upwards, and then things are going bad. It's called the bear market. So here we got some words and terms. IPO, initial public offering. Here we have POC, okay? Proof of concept. This would give you reason to believe that a company's going to do good because they're actually active. It's not just on paper. You can see them employing that which they say they will execute in real life scenarios that generate revenue. And you look at those analytics, you look at those numbers, and you have proof of concept. And that's why companies get behind it. So like when I was talking about MoneyGram and cryptocurrencies, there's proof of concept that got MoneyGram there. And that tells me if MoneyGram's paying attention to them and they looking to outdo their competitor, Western Union, maybe I need to pay attention because right now, what they're looking at costs a fraction of a cent. I don't want to find out later on that that's a $3,000 a share company that I could have bought in at a fraction of a cent and I had $100 to give. I don't want to find that out. I want to realize I lost $300,000. You working with me? Or $100,000. I don't want to find that out. That $100 could have made me $100,000 or $300,000. I don't want to find that out. Knowing that I knew something. Oh, that's what that meant. So we have to get into the knowledge of how to do research and how to decode the words that we see when we're doing research so we can make the most of our opportunities. So then we have put options and call options, which we discussed. We have time decay. From the time that you're born, this is also in the realm of put options and call options, but just understand this for now. From the day that you were born, no matter how tall you became, being tall gave you the impression that you were getting younger. And people don't start thinking you're getting older until you start getting shorter. This is some real stuff, psychologically. So the reality is you've been dying from the time you was born. Take that when you look at time decay when it comes to your investments, when it comes to put options and call options. The closer you get to the maturation date, if you get a call option or a put option for 6 months down the line, or 1 month down the line, or 1 year down the line, okay, the premium changes to your disadvantage. Every minute, every second, every day, you get closer to the maturation date, and that's called time decay. So that's something you have to always take into consideration. Then you have intrinsic value. Okay, this is something you also have to take into consideration. The value of that which you invested in based on that particular option in retrospect to time or time decay. We'll go into that. These are things you have to absolutely consider when you're dealing with options, time decay and intrinsic value. Then you have dividends. Okay, we discussed dividends. You have the bull market and bear market. Okay, dividends, just to say it, dividends is the money that the company puts back into the people that invested in them. Okay, so you have some companies out there that give some very good dividends. Provided how much you invest in, you're creating an income out of investing in companies you want to win. All companies that you say, I think it's going to do bad. But at the end of the day, they still got to give you your cut per the agreement. Now, there's other nuances. Like if they made less money than they have to pay out, then those ratios can tort the dividends. So we got to talk about those things. But idealistically, you understand what a dividend is. The company pays you for investing in them. You get you a company that's been doing their thing for several years on end. Then you start being risky if you choose. I like to make the money that ain't that risky. I like to deal with that first and then get into the other stuff. So dividends is an income that you can create out of investing in companies that are willing to invest in you. The companies pay you money for putting money into them. Okay, Apple gives dividends. American Airlines gives it dividends. Boeing gives dividends. You want to deal Coca-Cola, Burger King, these people give dividends. They give some of the highest dividends. So, morally you may not want to be invested in certain companies, but you can't really go into the stock market with emotions. I'm going to just tell you that now. This is a whole different beast. But I hear you, because sometimes I don't deal with certain things. But, if we're going to really do this, and you're going to be the Wolf of Wall Street, if you're really going to take this to the next level, you don't want to walk in with those emotions. It's going to mess up your money. But I get it, though. You see, this is tricky when you're conscious. And then you got the bull market and bear market. But you also have, I'm sorry. That was insane. We back. So, come on, man. You see how this shit is possessed. All right. I don't know what the hell all that was just now, but we're back. It just like, as soon as it happened, it left. Before I can even touch a button to make it come back. So we also have quantum computing. When we talk about crypto, I want you to study quantum computing because there's a cryptocurrency out there that's nuts. But quantum computing, basically we're talking about the new internet. Okay, so you got to start getting into the conversation about the new internet, because anything that's associated with the new internet is going to be worthwhile investing in. And it's not speculation. It's going to be worthwhile and in terms of investing in it. Okay, so we're not speculating about the new internet. Okay, there's a new internet. It's a whole lot more faster. And it deals with quantum computing. And that's where cryptocurrency gets integrated with all these things. And then currencies get integrated with all these things. We're talking about Skynet and the Terminator. It's not a game, for real. This is what's really going on. I'm not speculating. This is not, he's believing that this might happen. He believes, no, this is not a belief. It's actually happening. You need to keep up with this information and find out IBM's role. Find out what MoneyGram's doing. Find out what Bank of America is doing. Find out what the central bank is doing. We got to get into the information. We got to find out what to be reading. We need to know what to read during this hour so we can start saying, And then when we look up the seedinvest.com, when we go over there and we see new companies, startup companies, now we can start looking for certain things in particular in retrospect to the things we have gathered about quantum computing as an example. It's not really gambling at this point. It's about having a hot hand with research and paying attention and watching the news, knowing what news to watch and knowing what things to read, what publications to read often, what kind of notifications you want being sent to your phone. Because the combination of those things, and then who to talk to that's also indulging in this information. So it won't be overwhelming starting from scratch. You can create or simulate the type of atmosphere that you need to keep you abreast with these things. You don't have to be a super genius. Just be in the know. And then you can make decisions based on what you know. Day trading, swing trading. We talked about those things. And again, the books will be coming out at the end of April. We'll be back. We'll be back with the bookstore. We're aiming for April 20th. April 20th, I believe, will be the date for the new books and the ones that I wrote previously. Make sure you register if you haven't. If you're watching this, you most likely did. Register at IamBrotherPolite.app. Just stay in tune. But this is the end of class number 1. Please be informed that these classes are designed to touch everybody at different angles, at different levels, no matter what level you're on. Class 2 will be the same way. You'll have some novice information, and then you'll also have some accelerated information. But everything after this class gets intense. You'll be updated for when the next class is. It may be 2 weeks from now, or it may be next weekend. You will be informed way ahead, well in advance. Also, you guys will get a personal call from myself or my administration to make sure your apps are set up and that you understand what's going on here, so you're prepared for the next class. And that's what's going to be the determining factor if whether or not class will be next weekend or the weekend after, because we're going to contact every single body that has purchased this course, everybody that has watched this class, we're contacting all of you one by one to make sure that you have the right apps on your phone, because we don't want nobody lost in the sauce. We want to make sure you know what you're doing. Your accounts are already funded if it needs to be funded, whatever level you're on. If you're having a problem setting certain things up, we want to at least give you one real good courtesy call. We will not speak to you for 30 minutes. That it just can't happen that way. But we will call you. Hey, do you have this app? Do you have this app? We'll send you the necessary link if you need help with something, and we'll get the ball rolling. Because when we do the next class, I have to feel safe presuming that everybody's at least on a certain level, so no one's confused by the time I do the second class. Because the second class is where the mathematics is at. The second class, we're executing, we're trading, we're going bananas on the second class. Okay, you need your calculators for those of you that need those things. You need your calculators for next class. We can't play games, so I need to make sure you guys are fully prepared. So walk with me, you'll get updates intravenously throughout the course of the week. And again, we will be calling you starting tomorrow, one by one, for everybody that has purchased this course. Thank you very much. Stay tuned. We love and appreciate you. Iluvu.